Hi, I'm Jeff Wecker. How are you today? Those who don't know me, I'm a former member of the Chicago Board of Trade. I've now been in the business about 25 years, and I'm fortunate enough to be the leading FX trader on ticker Taka right now. I think I'm plus about 190% since October, which is pretty amazing. So welcome to the show, which is now known to become Wecker's Weekly on tickertalker.com. And today I want to talk to you about why people lose, okay? Which is the flip side of the coin of why people win. But we're going to see why people lose and why where you get into a trade is perhaps the most important thing that you can do, something that I focus on, finding a place where I can have the lowest risk possible and the most potential profit. Look at this chart right here. This is Australian dollar, US dollar. If you look back here on, I think around June 1st or June 2nd, the price was 69.26. If you look 25 days later, over here to the right, to June 23rd, 24th, is that same price. So Australian dollar, US dollar has really gone nowhere for 3 weeks. And all they've been doing is taking people out, hitting their stops and making them all losers, okay? So if you buy or sell at the wrong point, the market's definitely going to kill you. Here you had a rally. If people felt it was strong, if you bought up here, they immediately killed you and took out all the stops. Then they feel if they hadn't gone high enough, they went up even higher here. And once they hit even more stops, then they made even new lows from here to make sure they took out all the stops again. And if they didn't get them all here, they went down once more to make sure they got the very last one. A tip-off to what you see happening here has to do with the wick on a candle. This candle here has a very long wick. And what's happening there, all they're doing is taking out stops. That's what a long wick, when you see a long wick to the upside, they're taking out all the stops before they go down. Markets have a history of always giving a fake out in the wrong direction, a big head fake, take out all the stops before they go where they want to go. They did the same thing down here. People who had bought, okay, the market was going to go up and they would have been right. In fact, they were right that it was going up, but they lost money anyway because what they did is take it down with this long wick, take all the stops out and go up. So this is a history, a 23-day history of stock that had tremendous movement up and back, but went nowhere. And the people who were trying to go with what they thought was a trend, they ended up losers. Unless you're going to buy or sell at the right place. And we're going to talk about that now. Let's take a look at some successes and failures. Here's, let's see, Audi Swiss franc. This is a 5-minute chart. And what you see over here, I've drawn these two red lines, one going across here and the other off the bottom, which created a triangle, okay? And a triangle is one of the patterns that people play, okay? They will let the prices go sideways inside the pattern, and when it comes out of the pattern, they'll go with it. But look what they did here, drop below the pattern, okay? And they're all sold as short. So they're all short down here. What happens? It comes back inside the triangle, comes out the top of the triangle, and a great move straight up, which they all missed. Because they sold it down here, got stopped out somewhere around here, okay? I personally started to buy it inside the triangle. Once it went below the triangle and then went above, it was a failure, so I went with it there. I actually bought more up here, coming out the top of the triangle, and it made a nice trade. So again, it's all important where you do things, okay? If you buy things, based on lines, at least you know, if you can find a line, at least you know where you're right or wrong, okay? If you sold it here coming below the line, that was not wrong, that was correct, but you had to get out right here. And if you're really select trader, you got long right here, you got long again up here, and you made money on the reversal. Why do reversals work so great? Because so many people are expecting, when they saw this, they expected the breakout to the downside. They got short, and that built up a lot of shorts in the market. And the market's going to go up. There's nothing that likes better than a lot of shorts. Okay, so it went up pretty fast, and it was pretty powerful move. So that's an example of a failure. Let's see what a success looks like. Okay. This is I'm going to look at Euro USD 5-minute chart. Okay, here's the same pattern. Okay, we went up, we went into a sideways consolidation. I drew in my triangular lines right here. While it was going sideways in this consolidation, all it was doing was taking out stops. I wanted no part of that. I'm not going to trade in this stuff. And as you can see, as I mentioned before, the last thing it does before it goes, what it's going to do is a very sharp move in the other direction, take out the stops, which it did, gave you one more little head fake, and then came out the top of the triangle for a great move. But this was a successful triangle. The first one we looked at was a false breakout to the bottom, correct breakout to the top. This one you bought right here, okay, and you had a great ride up. So showed you what a failure looks like in the triangle, and I showed you what a success looks like. And the point is, you can play both ways. You don't have to be just a success player. You can be a failure player because, like I said, when you're playing a failure, there's so many people going the other way that you get great support as we hit all their stops and go in the opposite direction. Let's look at another interesting one. This. All right, this is very interesting. This is British pound Australian dollar, and over here on this side, I started to draw in the triangle, okay, which was correct. And look what it does. I think this was the other night. It just shot up out of nowhere, okay? All the people who were short, they took them all out on these stops, broke out the top of the triangle, but it immediately failed, came back below the triangle where we sold it, okay? And then we sold more again, coming out the bottom of the triangle for a nice profit from here and profit from there. So again, patterns like this, triangles, rectangles, head and shoulders, all of them, they can all be played from the failure and success point of view. You can make money both ways. And look at, by the way, when it came back inside this triangle, when it failed up here, failed the upside breakout, look how fast it broke. Look at all that power as it hit all the stops of people who were the wrong way. Also, again, we mentioned the power of the wick. Whenever you see a powerful wick here, you see it there. You see one over here, okay, again, taking out stops before we go the opposite direction. All the way over here on the left side, same thing to the upside. People bought it here, we got to take them all out, head fake before we go the real way. So be on the look for not only pattern failures, but be on the lookout for long wicks, which tell you this is the fake out before we go the real direction. Another one I wanted to look at today was NZD dollar, and that was the okay, here, you look over the middle of the screen. This is kind of interesting. This is a very tiny head and shoulders. Here's your left shoulder, here's your head, here's your right shoulder, here's your neckline. It broke through the neckline and got everybody short because everyone saw this head and shoulders, and when it goes through the neckline to the downside, it's supposed to go down. So they all got short, including myself. But when it got back above the neckline, I reversed and got long, okay? and it never went back below. It came back to near, never went below the neckline again. We had a nice, beautiful profit all the way up. So again, this is another example of how you turn failure into success. Next one I wanted to look at, EuroCAD. That'll come up for us. Okay, this is kind of an interesting thing. This pattern is clearly a rectangle. I drew the lines up here, lines down here connecting tops and bottoms. The rectangle is a powerful tool. I primarily teach FX, but I also have some students who are in the stock market. And I've taught them that over the years, last 100 years that is, that people have made fortunes playing rectangles in the stock market. They like to see the sideways consolidation go for, say, 20 to 60 days, roughly, like that. So they will go through all the charts that they have in the stock market, looking for rectangles and daily charts that go from, say, 20 to 60 days, and then they will go with it on a breakout of the rectangle. And people have made millions just doing that, to show you how simple trading can be, okay? So if you have a way to draw your rectangles on all the different stocks, as many as you can, and just play the 20 to 60 day breakouts, you're going to make a lot of money. This was a failure to the bottom, so obviously that particular kind of trader, a stock market trader, would have sold the breakdown, but as soon as it reversed and came above the line, they would have got long, they would have added more here, and turned out to be a great trade there. So if you're a stock trader, that's something very simple to make your life very simple going forward. Just pull out the daily charts and, as I said, find 20 to 60 days sideways triangles, rectangles, as I said. Okay, so I think we've covered everything today that I would like to cover. Join me next week for Wecker's Weekly at the same time. If you want to email with any questions, it's jwecker4, that's JWECKER4 @gmail.com. And I look forward to seeing you next week. Have a great week.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.